we've got Janet Yellen heading the Treasury as economist Janet Yellen, or former Fed Chair Janet Yellen. And so she understands very well labor market dynamics. She's a labor economist by training. And so when you look at the labor market and the fact that we have so many that are classified as long-term unemployed, and the fact that the probability rises so sharply for them just leaving the labor market altogether, if you don't quicken the economy, the pace of growth as much as possible to bring them into the labor market, then you do have much longer term problems down the line. And so Janet Yellen, the economist, is approaching this in that classic way. I do agree that we need to have much more robust unemployment benefit programs. I do agree that state and local governments need a lot of aid here. And so we think that something closer to $1 trillion will ultimately get passed, and that more is needed here. I don't expect something as large as the full 1.9 trillion. Think of that as the opening bid.
So Ellen, let's talk about this notion that if nothing's done now, or if the size of the package is not big enough, then worse things happen down the line. In your opinion, what exactly are the worst things that can happen if Congress doesn't act to get that stimulus out now?
So the body of evidence and the literature and academia shows that every single deep downturn that we study, the longer it takes for the economy to recover, the more lasting damage there is, the more lasting scarring there is to the economy. So structurally higher unemployment rates, lower potential growth, lower neutral interest rates. And so it's really, you want the economy to recover as quickly as possible. So easing the pain of those people that are unemployed in order to keep them attached to the labor market and then eventually pull them back in. She could be wrapping in some of the pains, though, from COVID as well. There's a lot of spending toward testing and vaccinating the population that is included in the package that we expect will be passed. And that's really important. Because we're off to a slow start here with vaccinating the population. And we hope that under the Biden administration, we'll quicken the pace of that and play catch up, so to speak, and get the economy back on track faster than otherwise.
Ellen, there's been a school of thought for the last several months and maybe even the past few years now that there's been a fear of a possible Democratic president coming in, a fear of a sweep throughout Washington, D.C., with Democrats controlling both Congress and the executive branch. What do you think? Should investors be fearful of the coming months and years because of the tilt towards perhaps certain policies? Or are we making much too much out of this this idea that the economy might get derailed, or the economy, the markets might get derailed because of what's going to happen in a new Biden administration?
Well, I think, our strategists started writing very early on at the prospects of a Biden administration and control of Congress, Democrat control of Congress, that if there was a negative reaction in markets to that, that it was overblown and that markets should look through that, because on net, right, what would markets be concerned about? Higher taxes, and we will get higher taxes. Later this year, we will probably get a rise in the corporate tax rate. We will probably get a rise in the income tax rate for the wealthiest. But guess what? It's not going to be fully, the spending that Democrats will do will not be fully funded by those taxes. So you're talking about on net deficit expansion, which adds even more tailwinds to the economy. So fears of a Democratic sweep here, if there are, that it's overblown. But I can tell you from looking at markets and how they've responded since the election, I think markets are looking through that as well. It's one reason why we've seen that reflation trade, markets gaining more traction here in inflation markets and giving the Fed credibility that maybe all of this fiscal stimulus, finally coupled with the easy monetary policy, maybe get us higher inflation, finally. And so we're gaining more traction there in terms of the markets giving the Fed credibility. So I think there's a lot of positive built into the markets. Now, therein lies an issue. If the market's already priced in the prospect for all of this stimulus, well, then you've already digested all of the good news. And we, of course, then fall back on just focusing on the path of COVID, and we're subject to the ebb and flow of COVID news.
Shepard Smith here. Thanks for watching CNBC on YouTube.